Hello everyone, in this video I'm going to explain you channels. What is channels? Channels is like recording transaction, and transaction has to be financial. Non-financial incident cannot be considered as channels. Like your farm's director maybe die, like you hire people, employment agreement, those things cannot be considered as channels. In channels, always there are five elements, the five basic elements of accounting. Always those elements will affect. So please, before watching this video, please watch my basic elements of accounting video 01 and basic elements of accounting video 02. You can see there is the five elements of accounting: and expense, that is debit; asset, that's also debit; but revenue is a credit, and liabilities and owner's equity, credit as well. However, if expense decrease, that occurs credit. If revenue increase, that occurs debit. On the other hand, if asset decrease, that is called credit. If liabilities and its owner's equity increase, that is called debit. Please remember these golden rules. Now the question is, how expense increase? Suppose you pay rent, you pay a bill, electricity, those things, your expense increase. Suppose how revenue increase? Suppose you are earning money from providing service or selling goods, so your revenue increase. How asset increase? Suppose you have to buy equipment, you have to buy a truck, you have to buy a motor vehicle, so your asset gets increases. Now, how liability and owner's equity increase? Suppose you invest capital, your owner's equity increase. Now, how asset decrease? Now the question is, how asset decrease? Asset decrease, accumulated depreciation, it is called minus asset. So if you see the accumulated depreciation or any depreciation, so it's like asset decrease, and when asset decrease, it's a credit. And how liability decrease? This one is very simple. Suppose you're paying to accounts payable. So when you pay your accounts payable is a liability, right? So your expense accounts payable, so your liability decrease. So that time accounts payable gets debit instead of credit. Accounts payable supposed to be credit all the time, but when you pay to your accounts payable, so accounts payable decrease, right? So that time accounts payable become a debit. Now, before starting doing journal entry, please remember these three things. If you see on the recording transaction, purchase on account, paid on account, invoice customer, bill customer, if you see incident like that, if you see transaction like that, you have to know these all happens on credit. These all are on credit. But if you see purchase on account, it means you purchase asset. If you see the paid on account, it means you paid expenses. But if you see invoice, customers or bill to customers, it is revenue. You have to know also two things, like in asset, if not mention of cash or on credit, you have to assume it happens on credit. But on the other hand, if in expenses, if not mention of cash or on credit, you have to assume on cash. Suppose on our first example, purchase equipment for $1,000. It didn't mention it's on account or on credit. It didn't mention anything. So you have to the journals will be equipment debit, accounts payable credit. On the other hand, if you see on the expense, paid rent of $100, right? Paid rent of $100, but it didn't mention cash or on credit, but you have to assume it happens on cash. That's why rent debit, bank credit. However, if they mention something, suppose like they mention on credit, you have to think it's on credit. But if they mention it's on cash, you have to you have to write it's a bank. And on the other hand, if they mention on credit, you have to write accounts payable. But if it's on cash, you have to write bank. That's all. Thanks for watching my video.